This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning, bright and early. We're coming to you as always from the CNBC-TV18 Motilal Oswal studios. I am Prashant. With me, my colleague Surabhi and Nigel. Morning, guys.
Morning.
Hi, good morning, Prashant. Good morning, Nigel. Well, I'm here because Sonia is not. I'm so glad you are, Prashant. We're hoping you're feeling better. He's a warrior who's pushing through a bit of a little cold.
Hope without any sneezes, right? Otherwise, you're going to turn your faces that side and put a partition here.
I think there's some weather change, right? I mean, you just look up today, there's a dark cloud.
Yeah.
So in all probability, I think we'll see some...
Nigel, monsoon rains are still away. I mean, you know...
Exactly. I don't know what cloud he saw in Bangalore,
but it's a little overcast. It's like...
It's a little overcast. So. Surabhi, I come on a two-wheeler. I have... You know, I know how hot it is. Today it wasn't that hot, so that's why I said maybe...
It's a good sign then.
Maybe, I mean, it depends. If it rains, then it's a bad sign. How do I get home? But it's been a little bit cooler if I compare, you know, these couple of days in comparison to what we have seen in the morning, Prashant. I know during the day it must be getting really hot.
Yeah, absolutely. The skies for markets are not overcast at all. I mean, they're looking bright and sunny. So let's actually, get you the lowdown in terms of what you need to know. Okay, so Nifty yesterday saw pretty good follow-on buying after taking support of the 20-day moving average on Friday. Remember, in the morning yesterday, same time we were talking about this, how it was a very clean 100-point bounce off the 20-day. And many times it happens that, you know, once you retest the short-term reversal level, which is the 20-day, markets can kind of extend gains, extend rallies, respect that level and move higher. And that's what we saw. So 18,314 is where we left off, not very far away, about 20 points away, less than that from the day's highest level. Now, you can nitpick and say that banks did not participate, and that would be true. Banks were unenthused through the course of the day, and the broader markets were mixed. So it was not wildly, positive advanced decline, broader markets rallying. It was 1:1, middling through the course of the day. So there were equal number of volume-led losers, equal number of single stock large gainers as well. And we'll talk about some of those things. Is the sentiment coming back for the Adani Group stocks? I mean, I think it's an important question. Remember, and this is data from exchanges, etc., retail ownership in Adani Group stocks, I mean, this is public data, since the time that the Hindenburg report has come out, has actually gone up. It's not come down. So, and, this used to be a bunch of stocks which was pretty representative of retail sentiment out there. Yesterday was one of the best days, actually I think the best day for the group stocks since the Hindenburg report came out. So keep an eye out on these stocks. Once again, big gains. Enterprises Ports are part of the Nifty, but all of the other 5-6 names were either at their daily limits higher or posting very, very strong gains. On the Nifty and the Bank Nifty, so the Nifty has got resistance at the swing high of 18,459. It's not very far from where we are, about less than 150 points away. And the daily upper limit for the Nifty is at 18,521. So these are near-term resistance levels to watch out for. Of course, the all-time high at 18,887. But in the near term, these are the two levels to take out. On the way down, the 20-day moving average, which so beautifully sort of was respected last Friday, should act as a support. That stands at about 18,142. Markets have been looking good overall. Bank Nifty support comes in at the 20-day moving average. By the way, the bank index did not test the 20-day. The Nifty did on last Friday. But the 20-day for the Bank Nifty stands at 43,388. And that, I think, is the support. So I'm just putting out the support. We'll see if, the action starts to come back into the space and we'll look at levels higher. But if the Bank Nifty continues to see a little bit of sideways kind of action, that's the level which it needs to hold on to. U.S. market action overnight is okay, it's positive. The Dow was a little lower, but the Nasdaq, the Russell 2000, actually the small cap Russell 2000 index was up about 1.25%. So it's not looking bad. And global markets are keenly waiting for the resolution to the U.S. debt ceiling. There are 9 days to go. If you consider that the 1st of June is the date. I mean, some say it'll be 5th, some say it'll be 7th. But assuming it's the 1st of June when the U.S. Treasury runs out of money, there are 9 days to go. And any resolution there, I think, can spark a risk-on rally in global markets as well. There are people like James Sullivan of JP Morgan yesterday, same time in the morning, who were telling us that markets are not pricing in any fear. And his fear is exactly that. And he's recommending investors in the U.S. to take some go into cash and then get back in when the market does a bit of a swoon around these headlines. So we'll wait for progress around this one, but that's the trigger to watch out for through the course of this week for global markets. Surabhi.
Prashant, hi. I remember I think it was political science or international relations class, so way back in class, the 9th or 10th, I loved a word called brinksmanship, right? And that's exactly what's going on with those debt ceiling talks right now. So you're meeting one day, not meeting. I think the Speaker of the House made some positive remarks after the meeting with President Joe Biden. So it's a daily phenomena. But what we do know is that while markets on the equity side are kind of taking it in their stride and mostly unfazed, look at the US 10-year. That seems to be pricing in some of this uncertainty. No one's holding their breath saying that, oh, this could actually become an issue. People expect it to be passed. But the US 10-year has inched up. For the longest time, it was around this 3.4, 3.5% handle. But now we're looking at a level of 3.7. So some of that pricing in that Prashant alluded to, that James was talking about yesterday, maybe at least in the bond markets, some of that is playing out. The dollar index also at 103. The key question for us over here really is that what next? What are the triggers? We're at the fag end of the earnings season. And this is a market that's searching for some more decisive cues to perhaps come its way. The key question is really whether this zone of 18,400 to 18,450, whether that can be taken out this time, because it is here where it seems the bulls kind of get a little jittery. I was looking at the FPI trends, no complaints over there. And this is the data coming in from the depositories. So it's the final data. And it's been very, very strong right throughout, barring 2 days where we're in triple digits. The rest of the days, it's 1,500 plus, 1,500 to almost 2,000 on the FPI side. Even yesterday's number was about 750 net positive results. As I said, we're at the fag end. It's some good, some bad. Yesterday, PB Fintech, by the way, for me, really stood out. At that adjusted EBITDA level, they have broken even. One can argue the sanctity of the whole adjusted business, right? Adjusted EBITDA, adjusted PAT. That's a different debate, and we'll have that during the course of the day. But even at the PAT level, the losses have really reduced significantly. So that's a number that stood out for me post-market hours. Shree Cements, Nigel will talk more about that. Some disappointment at the operational front. BPCL, fantastic on the operational front. Huge blowout performance on margins, much better than expected. So we'll keep digesting some of these numbers as we go along. Today's tally, I thought I'll just put that out as well. We have some interesting names beyond the index. We have Ashok Leyland, Dixon, there's Biocon, NMDC, Amara Raja. So stocks with a fair amount of interest in the market reporting today as well. Nigel, what's your sense? You think the bulls can take out this zone of, it's only optical. We're practically at all-time highs. Optically speaking, it's this level of 18,400 where, perhaps a little bit of cold feet situation happens. Well,
Surabhi, you're recalling your school days. I'm just recalling the IPL. There have been a lot of good innings in there.
Yeah.
But what takes you home is that final punch. And do the bulls have that final punch in there? That's going to be important. For one, who's really playing a good knock in cricketing parlance is the Nifty IT index. Yesterday, that index was rock solid in trade. And, importantly also, it closed above the 100 and 200 DMA. For the first time in a long while, it closed above the 29,000 odd mark. So a bit of a technical factor playing out there. And the markets were up 100 points with the Nifty Bank not performing. That's because of the IT index. The bears, though, they have given their intent pretty clear. They're saying they want to defend that 18,450 to around 18,500 odd mark. But for today, maybe the IT index has some more room to move higher, given that the NASDAQ ended at its highest levels we've seen since August 2022. But the crucial factor is going to be the Nifty Financial Services Index, because today is Tuesday, so obviously the expiry plays out there. A quick word on the flows. Yesterday, you saw the FIs and DIs, both of them bought, and I'd like to look at the data together. So yesterday, the institutional buy number was around 1,500 crores, which was 50% higher than the 10-day average. On average, they've been pumping in close to around 1,000 crores. And just looking at the large cap stocks, it told you that institutional flows were pretty good yesterday as well. So let's hope that continues. The FI data from the FNO market is not giving you much direction. They added more longs than shorts. They bought more calls than puts. The problem is they also wrote more calls than puts. So that's really inconclusive in terms of the data points that are coming from the FIs in the FNO market. And this week, we know we have expiry that plays out. So things will pick up steam in the next couple of sessions. Now, the PCR has moved to around 1.21. Remember, when it moves to around 1.35, more often than not, we see a bit of a pullback. So it got some bit of room out there. And the reason that it's moved from around that 0.8, 0.85 just in the last 2-3 sessions to around 1.2 is because at around that 18,200, 18,300 put, well, they added close to 90 lakh shares. Aggressive writing is what we are seeing at those levels, which brings us to the levels. Since the 18,200 put is getting written, the premium ended at around 30 rupees, but at one point of time, it was close to around 70 rupees. And that's precisely where the 20 DMA as well is at. So on the downside, 18,130 becomes a support zone. On the upside, the bears, they're going to come to fight at the highest levels you've seen in the recent past, which is 18,459. But since it's the Nifty Financial Services Index expiry, well, we saw some writing yesterday at around the 19,400 call. Just going by those data points, well, 19,500 becomes a bit of a resistance zone. The premium ended at around 50, but it was higher during the course of the session. So if the Nifty Financial Services Index can get closer to around the 18,500, maybe breach that, well, then the bulls will be betting on us moving and breaking the recent highs. SGX Nifty, for starters, is indicating a bit of green. Yesterday, we had a good session. We need to build on that. IT could fire, but we need some support coming in from the banks and the financial names, because only then we get to around that, closer to around 18,450 odd.
All right, Nigel, so we'll keep an eye on the IT names as well. Before we go any further, let's quickly tell you what's lined up in the first half hour of the show today. We get you updates from markets across the globe. Cameron Brandt of EPFR Global will join in to discuss the global setup, but we'll focus with them on flows specifically. Our research team gets you CNBC-TV18's list of top 10 stocks for the day. And at 8:30 this morning, we have Sanjeev Bhasin of IIFL Securities with his thoughts on the market. He's bullish. He's thinking of newer highs. So that conversation comes up as well.
Okay, let's kick it off then with the equity call of the morning. Hiren Ved of Alchemy Capital says that they're bullish on the market, even as it is in consolidation mode. He says we have seen reasonably good earnings in the fourth quarter, and the breadth of the market has improved substantially. He says better than expected earnings are a good catalyst for the market to bounce back, and he will not be surprised if we achieve the 20,000 target on the Nifty by Diwali this year. They like capital goods, infrastructure, auto and cement, which they feel are in a structural bull market. He says it is also time to become contrarian and start looking at discretionary consumption stories like QSR and liquor companies.
Well, let's get you some money market views now. Abhishek Goenka of IFA Global says the rupee has been under pressure over the last few sessions due to broad-based dollar strength, cash dollar shortage and depreciation of the yuan. He says it will be interesting to see whether the RBI is as aggressive in putting a ceiling for the pair around 82.9 to a dollar mark as it has been, while placing a floor at 81.6. He says with the rupee liquidity now comfortable in the banking system, the RBI will supply cash dollars through swaps to alleviate cash dollar shortage, thereby supporting the forward curve and easing the pressure on the rupee. He expects the pair to continue to trade in a range of between 81.6 to 82.9 to a dollar.
On bonds, Ajay Mangdulia of JM Financial says improved liquidity with GSEC maturity, RBI repo injection and perceived deposits of large ticket notes have improved levels in short maturities and sentiment in the market, which is likely to continue to be positive for some days. He says the steepness in the yield curve can be seen in light of yields hardening in the US Treasuries. He says market sentiment is likely to remain positive today, with yields on the SDL auction expected to retract to current levels. He says any further rally in crude, coupled with hardening of yields in developed markets, may impact the ongoing rally and stability in yields. He's expecting the 10-year benchmark bond yield to trade in a range of 6.98 to 7.02% for the day.
Well, a lot of stock-specific action that we're tracking for you, and we'll get to that in just a wee bit from now in our special Top 10 segment. But we're looking at BPCL, Vedanta, PP Fintech, SJVN, Astro Micro, India Bulls Housing Finance, and Fusion Microfinance. Their stocks on the back of positive news flow. On the flip side, you have Shree Cement, Finolex Industries, and HEG that could be reacting to negative flows.
Okay, well, Cameron Brandt is Director of Research at EPFR Global. They track fund flows across markets. Cameron, great to have you with us here. Good morning. Thanks very much for your time. How are flows to global emerging markets looking? I mean, just you guys have weekly numbers, but just sort of stretch that out a little bit and put the latest numbers into context. Are we at, highs? Are we middling in the middle, or are we at lows? Where are we, contextually speaking?
Middling, but that's probably better than expected given the ongoing tightening that's occurring in the US and Europe, and the genuine fears that we'll have some kind of a recession, certainly here in the US, by the fourth quarter, which is probably not good for emerging markets. I will say that once again, flows to China-dedicated funds are accounting for a very large amount of the headline number, between 60 and 80% in a given week. So it's positive flows with a distinct tilt towards China. I would say in runner-up position, though, Indian funds have been doing very well lately, 9 straight weeks of inflows. And those inflows have been of a higher level than we've seen in a while.
Sorry, 9 straight weeks of inflows into India dedicated funds?
Mm-hmm.
Okay, that's interesting. But the bigger thing will happen when global emerging markets start to get money, right? Because this is still a small portion of how we get foreign inflows. India dedicated funds, that is.
Right.
But you're saying that is getting money.
Right. Yes. It's usually when the big diversified funds start to get serious money, their large allocation to India translates into a significant pickup in flows into Indian equities.
Okay, got that. That's good news for us, Cameron. Just want to understand whether the money movement is showing any irregular patterns or, patterns that we should note, given this impasse on the U.S. debt ceiling. Are you seeing any interesting, for instance, there was some rotation out of treasuries. The yield has now climbed back to 3.7%. But any interesting trends, given that, there's no deal as yet?
Right. So what has been interesting is that we really haven't seen investors step away from U.S. bond funds. The level of flows is relatively low, but it's remained positive right up until the current week. We are seeing, I think, some of the interest in Europe bond funds is driven by a desire to rotate to another developed markets universe of debt. And we've seen very consistent inflows into Europe bond funds despite a number of headwinds there. On the other hand, I would also say I'm not actually that surprised for all the sound and fury. I've now seen quite a few of these debt ceiling standoffs. The sky usually falls a bit later than the headlines and the advocates and the politicians would have you believe. I suspect that the real crunch point probably isn't until July, late July, even into August. I think there's enough rabbits to come out of the hat to get us to mid-June, which is one of the estimated tax payment points. So there'll be an influx of cash to the Treasury then. So I'm not actually expecting to really see significant movement probably for another couple of weeks.
All right. Good to hear your views, Cameron, on both equity flows as well as on bond flows. What about gold dedicated flows? Gold prices, they have been quite firm, but any observation on that?
Yes, we are sort of finally starting to see pretty consistent inflows into gold funds. I was slightly surprised last year at how slow, given the uncertainty, people were to turn to gold, certainly through mutual funds. But we're now seeing pretty consistent flows into the gold funds that we track. We're also seeing people turn to cash. The big winners certainly over the last 2 months have been the big liquidity funds, the money market funds, close to 600 billion year to date. So people are certainly, I'm not going to say sell in May and go away, but certainly the significant defensive action in the fund flows at the moment.
All right, Cameron, got that. Thank you very much for your insights, always helpful We appreciate you taking out time today. We'll take a break on that note. On the other side, our list of top stocks to watch out for this Tuesday morning.
That's the boss's cabin. The canteen is behind. Good morning, ma'am. Good morning. And you are here. Good morning. Good morning.
मैम और कोई ऑप्शंस
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
कैसे करते हैं ट्रेड? Try 5 पैसा. Powerful charts and research tool. One click trade is the new cool. Get access to live market data. Margin funding bhi hai re beta. 5 paisa app karo install. Trading made simple, simple for all. With 5 paisa's wide range of products. Yahan wahan chahe ho jahan. Simply trade on the go. Aise karte hain trade. सोच मत छोटे, install मार. Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Hey, the SGX is telling us that we should get about a 25 to 30 point pop at the open. That's the level as we are looking at it, 18,367. So let's kick it off straight away with our list of stocks to watch. And topping that list is what else but Shree Cements. How's the performance looking, Nigel?
Well, a little bit subdued, actually, Surbhi. You know, the stock as well, I think towards the end of trade was holding in the green. I think it came off a little bit and ended just mildly in the green. Now, the numbers, well, they were a little bit disappointing. On the top line, it was better, maybe because of higher power sales. Now, they don't give the segmental breakup, but that could be the only reasoning out there. The EBITDA front, where there was a miss of closer on 3.5% to around 4% in comparison to our poll. So margins did come at around 18.7%. We are working with a number of closer on 20%. The profit number looked better. I'll just tell you that in just a bit. The calculated EBITDA per ton, we have put in the, the EBITDA number with the volumes. And this shown a bit of an improvement, if you look at it in the last few quarters. So we're back at around 1,000 rupees odd, but I'll tell you what, the street wanted a little bit more. What went on? Sales volumes were more or less in line. 10 to 12% growth is what we're factoring in. It came in at around 10%. The problem is power and fuel costs as well as freight and forwarding costs. On a year-on-year basis, they were higher. The problem is even on a sequential basis, it's higher. So were they sitting on some high-cost inventory? That could have been the problem that played out. And the PAT number was better because of a tax credit. Otherwise, that as well would be a miss. Now, at these sort of valuations, when it's a miss, it's a little bit disappointing. But we'll be joined by the management of Shree Cement later on in the show at 9:30 a.m. And I'll tell you what, you don't want to miss this conversation. Mr. Neeraj Akuri, the MD of Shree Cement, will be speaking to us.
All right, that's a keenly awaited conversation. We're looking forward to Shree Cement's management. Well, BPCL reported numbers, the last of the 3 oil marketing companies to report. Sonal has got details on how they performed. Sonal.
Good set of numbers from BPCL. It was a refining-led beat yet again after HPCL and IOCL. To take you through the numbers, revenues declined 0.9% but higher than the poll. EBITDA also came in at 11,153 crore rupees versus an estimate of 8,239 crore rupees. Margins expanded 600 basis points at 9.4% and net profit at 6,500 crore rupees, an absolute beat on poll of 3,981 crore rupees. As I said, a refining-led beat. Reported margins came in at $21 per barrel versus an estimate of $12.5 per barrel. Jefferies has a buy rating with a target price of 445. They say that the receipt of share in subsidy of 30,000 crore rupees from the government is the next big trigger for the stock. New capex at Bina that they recently announced could lead to elevated debt levels for the company. Investec has a hold call, but they have raised the target price to 375 from 320 rupees per share. They have increased the EPS estimates as well for the next 2 financial years by 10 to 11%. Now, just doing a comparison between the 3 oil marketing companies, it's BPCL, which is the highest GRMs in the 3 at $21 per barrel, followed by IOC at $16 and HPCL at $14. So BPCL definitely stands out in the refining performance as well.
Okay, good going there. Thanks a lot for that, Sonal. Well, Vedanta, it's more of a dividend play, and they've done it yet again. So they've approved the first interim dividend of 18 rupees 50 paise. The total outflow will be around 6,900 crores. The promoter entity, well, they have close to around 68.1% stake. Remember, they trimmed off a little bit position in the last quarter itself. So they'll be getting bulk of that, close to around 4,700 crores odd. Now, as of the 31st of March, going by their press release, the net debt is close to around 45,000 crores. They're sitting on some cash, right? So that's why the gross minus the cash, you got the net debt in there. And the net debt to EBITDA is around 1.3 times. This is from their presentation itself. So in all probability to pay out this dividend, maybe we'll see the debt number continue to remain elevated. And how does this help? Well, the promoter entity is struggling with regard to paying, honoring some of their debt payments. So they'll be getting close to around this $500-700 million odd, which will fulfill that. So that overhang goes out of the way. Good news coming in. You get dividend, and the promoter as well gets some bit of breathing space. So positive breathroom.
Okay, so Vedanta, perhaps on the positive side as the day starts off. Let's now look at PB Fintech, and Surabhi has the details on this one. Surabhi, at least at some adjusted EBITDA level, there is a profit, right?
Thanks so much for that. So PB Fintech reported a very strong set of numbers. For the first time, and as guided previously, they reported an adjusted EBITDA profit of 28 crores versus a loss of 80 crores. Their revenues grew by 61% and their net loss was just 9 crores in Q4 versus 220 crores same time last year. In their existing business, which is Policy Bazaar and Paisa Bazaar, the revenue was up 31% and the adjusted EBITDA was up nearly 6.5 times to 64 crores. In their new initiatives business, which is the point of sales person, the UAE business and the corporate business, they scaled up their revenues by 137% and the losses have reduced to 36 crores versus a loss of 90 crores. Now management expects the new initiatives business to be contribution positive in the next few quarters, and also overall they are hopeful that the company will be PAT positive by FY24.
Okay, so some of these new age companies reporting numbers over the last few days. Now, more companies, this time from the old economy. Phenolics Industries, SJVN, HEG, Astra Micro. Sonal has got that list. Sonal, back to you.
So 3 of them on results and 1 on news update. Let me start with Phenolics Industries. Weak set, revenues declined 28%, EBITDA was down 18% after some income adjustments as well. Profits declined 68% for the company to come at 159 crore rupees. Margins expanded, but that's an arithmetic adjustment that we've seen there. SGVN, on the other hand, reported strong set of numbers. FY23 numbers were strong as well. Revenues were up 56%, EBITDA up 117%. Margins expanded by almost 2,000 basis points, leading to a net profit increase of 126% for the company. Expect a green there. HEG, however, was a disappointment. Revenues declined 8%. EBITDA was down 21%. Their margins have been declining in last couple of quarters from levels of 23% in Q4 of FY22, right now at 20%. So expect some red here. For Astra Micro, one of their subsidiary companies or joint venture companies actually bagged an order of 158 crore rupees from Defence Public Sector Undertaking. This is for supply of software-defined radio. So could see some green on Astra Micro today.
Okay, all right. Thanks a lot for that, Sonal. Well, Abhishek joins us to tell us about some more earnings that he's tracking. Morning, Abhishek.
Morning, Nigel. So to begin with, India Post Housing Finance, the gross NP ratio is at 6-quarter low of 2.86% when compared to 3.3% in the previous quarter. The AUM growth has been healthy at about 3.9% YOY and 11.1% sequentially, but that's not translated into the PNL. So the net income is down 16.8% quarter-on-quarter. The PAT is down about 10.5% quarter-on-quarter. The spreads, they have improved YOY but has declined on a sequential basis. Fusion MFI, now healthy AUM growth and net interest margin expansion actually aids the earnings momentum this time around. Disbursements are up 17.7% YOY and about 8.5% sequentially. The AUM growth is robust at 37% YOY and about 7.5% sequentially. The net income is up 46.8% YOY and about 16% sequentially, while the PAT is up 11.8% on a quarter-on-quarter basis. Asset quality has improved and net interest margin has expanded both YOY and quarter-on-quarter. Back to you.
All right, so that seems like a good set from Fusion Micro. Abhishek, thank you very much for that. In fact, you can catch the management of the company. They will be joining in at around 9:50, so watch out for that interview as well. Quick recap of our entire top stock list to watch out for this morning. The ones that have positive news flow around them are BPCL, Vedanta, PB Fintech, SJVN, Astra Micro, Indiabulls Housing Finance and Fusion Microfinance. Stocks with negative news flow are Shree Cement, Phenolix Industries and HEG. Okay, that's our stock list for the morning. Let's figure out what's happening in the world of commodities. Manisha Gupta joins in with the action. Manisha, good morning.
Morning, and thank you for that, Surbhi. Well, we've seen crude oil prices gain overnight. Actually, the overall energy pack was trading in the positive. The gasoline prices are trading at a 5-week highs. The U.S. demand for gas is reaching 2021 highs as driving around becomes on the higher side. Supplies from OPEC and allies and Canada, where we have seen the supplies decline in recent weeks, also seems to be supporting. And there are statements from IEA, a report from JP Morgan, a report from Whitehall. All of that suggesting that the second half of this year is going to be tight and the demand better. In the meanwhile, the street also is watching out for the Chinese stimulus measures, and that is what is keeping the metal markets as well jittery. In absence of that and the strength in US dollar, we have seen some pressure coming for many of these metal prices. So copper prices are off its highs and there is weak demand from China. LME inventories have been rising as well. But the clear laggard or the underperformance really comes in from zinc. That is trading at 2.5-year lows even now in Asian markets.
All right, Manisha, thank you very much for that. Well, we'll take a quick commercial break here. We have Rajesh Baheti of Crossseas Capital Services joining in to talk about SEBI's consultation paper on, limits on daily limits on F&O stocks. And if, a little later than after that, we'll have Sanjeev Bhasin of IIFL Securities with us to talk about markets and where he sees things. Stay with us.
ये स्नैक्स एंजॉय करने का नया तरीका है, स्मार्ट तरीका है। पर आपको पता है और क्या स्मार्ट है? इन्वेस्टिंग ऑन एंजल वन, जीरो ब्रोकरेज एंड फुल कन्वीनियंस। अब तो मैं सिर्फ फूड शेयर करता हूँ, ब्रोकरेज नहीं।
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.
What if buildings could tell you how they could be more efficient?
I'm listening.
Well, with IBM, you can use software to help you connect and analyze data from heating and cooling to elevators to lights.
What if we use AI-driven insights to pinpoint inefficiency?
Yep, and act on it. Saving energy, money.
And emissions.
Yep, that's a big one. Now you've built something better for everyone. That's the sustainability solution IBM and a global real estate company created. What will you create? IBM, let's create.
You know, people often ask me why I left my steady job at the call center. I wanted more out of life. So, I launched my own startup. Do you want to know how? Then start up your own business as an LIC agent. You want it, we've got it. Great products, zero investment, leading organization, and unlimited opportunities. So, are you ready? Now think big. Become an LIC agent.
Visit our website or contact your nearest LIC branch.
Okay, welcome back. So the SGX Nifty will come up on your screen. Take a quick look and then we'll proceed with our next conversation. 30 points higher, 18,368, right around where we looked at it at 8 a.m. Now, Rajesh Baheti is joining us right now of Crossseas Capital Services. SEBI has released a consultation paper on F&O price bands as proposed changes to curb volatility, information asymmetry in F&O stocks. Basically, what SEBI is essentially saying is that, in terms of daily price moves for stocks which are moving circuit to circuit, the amount which they can move should be reduced from, 5% incremental moves after circuits. It should be reduced to 2%. There should be greater greater cooling off period from one circuit when, between circuits as well. So once the stock hits a circuit and the stock goes into a cooling off period, that period should be increased to 1 hour as well. Rajesh, good morning. Good to have you with us here. Thank you very much for your time. Did I miss anything? I mean, just tell us, how do you look at this paper and how do you read the proposals?
Yeah, to be honest, so I don't profess to be an expert on this subject, but interestingly, you use the word volatility. I don't know if circuit breakers should be used to reduce volatility. Rather than they should serve as just maybe a strategic time out for investors to price in the new data, the new information, and reprice the stock. So logically, I would have thought that after a couple of circuit breakers, if SEBI wanted a fair discovery of a new price, maybe we could have experimented with the call auction process. But it does seem that SEBI does not like that idea. And the intention of SEBI is to reduce the quantum of movement that a stock can have in a day. And if that is the sole purpose, then maybe yes, what SEBI is proposing is okay. But if the purpose is to reprice the stock based on
hello
its
and
latest
welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Over the next 30 minutes, we'll be talking about the...
Apologies for that. There was some audio disturbance, but please carry on. You were talking about SEBI's intent of perhaps reducing, the movement itself, not the volatility, but the movement, because that's the question, right? They're talking about not just increasing the time interval, the cooling off period between the flexing, but they're saying reduce the movement allowed from 5% to 2%. How should we read that?
So I don't know, where I stand on this exactly, because if you look at the American markets, which we think are the most advanced and the most biggest capital markets in the world, you've seen recent events, how banks' data got repriced within a day, and banks lost 70-80% of their market value right away. So America goes to the other extreme and allows all the moves to happen right away. On the other hand, we're trying to slow this down. I think there is a middle ground. My question to SEBI would be, what is so broken in the way the current system works that they want to fix it? What are the recent events that have led SEBI to release this paper? Because I didn't see too much of a problem with the way the things stand currently. So honestly speaking, if the idea is just to reduce price volatility, the problem would be that the price discovery would take place. It would just take longer. And I don't know if that is a good thing as far as stock repricing goes.
Okay. There is a middle ground. America on the other. But there are no real sort of good, right answers, right? There are no correct answers here. It's a judgment call at the end of the day.
Yeah, if you recall earlier, we didn't have price bands on IPO days, and we've had stocks move 100, 200% on IPO days. Of course, in some of those stocks, it was very questionable, the quality of the stock that was IPO'd. But then SEBI opted for the call auction process, that you discover a price at the open of an IPO stock and then set the price bands. So I would fundamentally think maybe a call auction followed by a fresh round of circuit breakers could have been an option they could have tried out. But in their wisdom, they just want to reduce volatility. And if that is the sole criteria and not repricing the stock given the recent data and find a fair value for that stock, I think then what they're proposing is okay. But if the idea is to actually rediscover a new price as quickly as possible, then maybe a call auction followed. After a couple of triggers, circuit breakers, maybe a call auction process could have been tried out.
Is the call auction process followed widely around the world, Rajesh?
So SEBI's paper says that a couple of jurisdictions follow it. The rest have not followed it. We know in America there is no process of circuit filters. So whatever has to get priced in gets priced in instantly. So it is something that one can experiment with, maybe a sandbox. I don't know. The issue is, should the stocks reflect that true new value as quickly as possible given a change in circumstances or new data? And how much time should you take for that stock to reflect the new reality? I think that's the moot question.
Just a final question, Rajesh. In our market, we also have this ASM system, right? The additional surveillance mechanism. And now I think within ASM, they're saying put hard limits for stocks that are already under this mechanism. You think this is warranted? Because there's already an ASM. Those stocks are already on the regulators or the exchanges radar.
We have a lot of things other markets don't have, such as market-wide position limits and so many other things. In many ways, it served us well. With ASM, the issue is, once again, is it about just reducing volatility or trying to reprice the new data that is coming? And stocks will go into ASM, especially in the futures and options segment, only if there is a big breaking news on the stock. Otherwise, ideally, you don't think that a F&O stock that has such liquidity is likely to go under ASM very soon. We've had some recent examples following the Hindenburg exposures that, stocks with market caps of 100,000, 200,000 crores also went into ASM, and they did fall precipitously. But that was again, repricing some news, and again that debate is open. I think maybe some intellectuals on this can be called upon to really give us a better way of repricing these stocks.
Okay, all right, Rajesh, thanks so much for stopping by and giving us your view on this particular topic. Look forward to chatting up with you and wishing you a good day ahead as well. Let's talk about a couple of stocks now. Sanjeev Bhasin, Director at IIFL Securities, joins us on the show. Hi, Sanjeev. We're almost there, 18,500. You called it out, so good going on the index. Let's discuss a few stocks that will be in focus, Sanjeev, today. Shree Cement, the number's a little bit disappointing, but we know it's a quality name. It's corrected a little bit from the top. From the cement space, what do you like from here on? There's also some buzz of some inorganic growth. Let's see whether or not some deal gets closed out.
Yeah, good morning, Nigel. We missed you on Friday. I was live in your studio, and I had
one of your biggest... I missed you too.
And one of your biggest fans from my team had come. He said, I only follow Nigel. He's my idol. Because the data you give out on F&O and the derivatives is, kudos to you. So people don't follow me. My own team members follow you.
Sanjeev, I'm looking forward to meeting your team members. Maybe I'll come across to Delhi, in the next 10 days or so. I'm going to try to touch base, and thank you for, I put in a good effort, and thanks for noticing it. But let's talk about stocks.
So let's talk about stocks. We are hitting new highs now. We are closer to 18,460. I told Prashant and Surbi we'll take it out on Wednesday. Today may be a day of flat trade, but tomorrow we are up and rearing. You can't run with the hares and hunt with the hounds. If in end January, February, Adani hit 1,000, it is back to 2,200. As a disclosure, both the Adani twins are on our long position, and 3,000 is coming on Adani Enterprises just to scare the bears. So remember, greed and fear go hand in hand, whether it was Hindenburg or the SEBI promulgation and so on. All the real realizations are coming out now. The underlying businesses, as I had sent to Prashant around 27 February, Adani Port and Ambuja were a steal. We think Ambuja is going to be the top performing cement stock. Ultratech has hit new highs, and there's no question, even Shree Cement will join the rally. Simply put, Nigel, Shree Cement is the lowest cost producer of cement, not in India, in the world. And given that margins have accreted, we know that this is a weak quarter, the real margin expansion comes after the monsoon. So buy on declines and wait for 18,460 to get crossed, and we'll celebrate.
Okay, all right. So you're holding on to that call, Sanjeev, and we're watching the market as well carefully. You mentioned, this momentum that's coming through the market. Did you find it a bit peculiar that yesterday banks were sitting out, or do you think that that's a one-day phenomena, just technical adjustments? Would you basically, since you're positive on the market, would you load up more on financial positions? And if yes, which are the stocks that you would look at?
So, Surbi, yesterday maybe a little pause in that because you had the Adani twins and IT firing all guns. On Friday, I mentioned Persistent, HCL Tech and Tech Mahindra as my favorites. And I have no two ways. Bank Nifty is going to new highs. The expiry will be above 44,000. So if you had to sit out a day, that doesn't do any harm. AU Bank, IDFC First, Kotak are leading from the front. They will end at new highs. And then it's a matter of time as sectoral rotation takes place. Yesterday, the IT index was up 2.5%. And when last did you see HCL Tech, Persistent, LTIM, all of them move in tandem? So I think the underlying bearishness on IT is getting reduced. Ownership is maybe at a new low. And look at the woods around you. What is happening on the NASDAQ? I mean, Microsoft is up to almost $3 trillion. Apple has had the best run in the last 4 months, and so is Meta. So, anybody who follows those stocks has to be long on some of the IT plays. And I think it is a matter of time before the debt ceiling gets up. By the way, why do we have to follow the US always? Look at the so-called dumb asses, every month, every year, they have a debt ceiling which has to be done with. Have a budget and get it passed through. Take some examples from us.
Sanjeev, hi, good morning. Just coming back, we had to take a quick break here, but Sanjeev Bhasin is, interesting conversation and interesting phrase of words as well. We'll take a break. We are back and we will have Anuj join in for a quick trade setup as well. We get you the top stocks of the day with our technical experts and futures and options strategy as well. So all of that coming up. Sanjeev stays with us. We are back in just 2.
Is your strategy ambitious enough to drive transformation at scale? How can you design and deliver a strategy fit for the real world? Are you reframing your future, or is the future reframing you? Realize your transformation with connected strategy, transactions, and technology. Reframe your future with EY.
I'm a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know. You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
एक ऐसी धरती जिसकी सुंदरता की कोई सीमा नहीं, कला, संस्कृति और ऐतिहासिक धरोहर का एक संगम स्थल प्रशंसकों को एक जादुई क्षेत्र में ले जाता है। जम्मू कश्मीर में एक नए युग की शुरुआत।
हमें मिलकर जम्मू कश्मीर को नई ऊंचाई पर ले जाना है।
श्रीनगर G20 प्रतिनिधि मंडल को जम्मू और कश्मीर की सुंदरता और मेहमान नवाजी का अनुभव करने के लिए स्वागत करता है।
Okay, welcome back. You're with us here on Bazaar Morning Call. SGX is still indicative of a higher start. Yesterday we saw a nice follow-through move on the Nifty, but unsupported by the banks. And I think that's a talking point. Anuj, what are you watching out for?
Morning, Prashant. This is what we spoke about yesterday, that, focus on IT and banks could underperform. Now, the Nifty, of course, has a very strong momentum right now. And let's see, the bank Nifty unable to participate. But it's, seen 5 days of consolidation. Maybe one more day of consolidation is possible because today's financial Nifty expiry. And I've normally noticed that on Tuesdays, Bank Nifty doesn't make a trending move. But it's possible that over the next couple of days, the Bank Nifty participates and makes up for that underperformance. That's what it's normally done over the last 3 or 4 months. The Nifty IT, of course, yesterday we spoke about the 200-day moving average. That happened yesterday itself. It was a massive rally. I mean, expected a rally, but hand on heart, not the kind of rally that happened yesterday itself. So maybe possible that we see some consolidation today. So today you want to maybe focus on some non-bank, non-IT heavyweights like Reliance, Larsen, ITC, Lever, Maruti. That could be the pocket to focus on. I'm watching out for some important levels on some big indices. Nifty, 18,444 and 18,458, which have been the recent highs. Bank Nifty, 44,000 and 44,152. It's been the high of the day for last 5 days in a row. Nifty Financial Services, 19,400 and 19,500. That's where you have the highest open interest build-up. Today is the expiry of the Fin Nifty. And on Tuesdays, Fin Nifty is the most traded index as well. And on the Nifty IT, 28,871, which is a 200-day moving average. We spoke about it. And 29,041 is important. That was the last intermediate top before Infosys' numbers spoiled the sentiment. So that's why that's the level to watch out for.
Okay, all right. Anuj, thanks a lot for that. But as Anuj mentioned, there's going to be a lot of stock-specific action as well. And we're in conversation with Sanjeev Bhasin. Sanjeev, what about Vedanta? There seems to be only one play out there paying out dividend. Now actually it's getting a little tricky because otherwise they were getting money from Hindustan Zinc and paying it out. Now this is going to keep debt levels a little bit elevated because that Hindustan Zinc's kitty is totally wiped out. They'll have to generate fresh cash flows. How do you view this stock at around 285 rupees?
Yeah, so Vedanta has been a no-brainer all the way from 90 when Anil Agarwal tried to up his stake. He went up to 380, 420 to buy those stocks. And I think, Nigel, personally, I think maybe ferrous and non-ferrous both may have bottomed out. There was this humdrum of China slowdown and not being as active as China won. But I think dollar is headed lower. As soon as you get through this debt ceiling crisis, the dollar's rally will fade faster than you thought. And I think metals, particularly from the commentary I received from Tata Steel and Hindalco, they are going to be in very, very fine shape. So I think this is a buying opportunity. Vedanta has been the best dividend payout, I mean, in any of the any commodity or any stock which you take. And arguably, you know, the debt levels have always been a cause of bother, but that's been from 100 rupees. The stock is 300. It pays more than 85 to 90 rupees as dividends. And I think that, like I said, I am bullish on both copper and steel going ahead. Tata Steel seems very, very bullish. And I think it's just a matter of time as the dollar weakens. We should see China up and running and maybe commodities. So a dark horse play could be actually Tata Steel and Hindalco at this price.
Okay, Tata Steel at this price. By the way, Sanjeev, when he was on Friday here in the studio, he gave us 3 ideas. One, I think, was there was Piramal Pharma, Jubilant Ingreva, and there was one more, Sanjeev, right? All were from the chemicals and pharma space, I remember.
Chemplast Sarmar.
Okay, Chemplast Sarmar, yeah. And there's been positive news flow there as well, you know, that I think government regulations with regards to import of some important commodity. Now, anything else, Sanjeev, you know, out there in the small cap, large, mid cap space, etc., which has come into your attention, where earnings have been significantly sort of, you know, better than expectations? Any names, any additional names?
So Prashant, just to tell you, over the weekend, as usual, I was traveling. I was in Bombay, the next day in Ahmedabad. Ahmedabad airport has expanded like never before, and kudos to the Adanis. But my heart goes in Delhi because that's where I stay. GMR is rocking. AeroCity is doing business like never before. And I think their new expansion will see even more flights take off, which means, you know, footfalls, whether they buy alcohol or they buy chocolates, whichever Nigel prefers, both are going to see huge amount of uptick. AeroCity is going to be the dark house or the cherry on the picking. GMR is headed to 65.
Chocolates or alcohol? What are you getting us from Delhi, Nigel?
I think that is a settled issue. I don't think we need to debate too much about what...
No debates on certain factors, right? I don't have a sweet tooth.
That's a hint. All right, Sanjeev, always a pleasure.
By the way, I just want to say one thing. I think for our viewers, Sanjeev, you said, so new highs, and those who are watching, of course, I mean, will feel bullish listening to you. But you have a view beyond new highs as well. You're saying that a correction is due sometime in June, right? That's the view? Right around the time where you're going for a holiday, you told us.
Yeah, Prashant will take it when it comes. Why create clutters just
but
now?
you'll be on the...
First get to 18, 600, 700. Let the party begin. I mean, where is the party? The busy and by the way, the most unwanted players are the biggest bulls right now. So cheers to Nigel, cheers to Surbi, and obviously you might the biggest, most gentleman anchor I've ever known is Prashant. And kudos to you, even though you're not a bull because you own land, but stock markets are headed higher.
All right, I don't know where that comes up. Every time we speak, Sanjeev, I don't know, you throw that in. Thank you very much. Appreciate you joining in. Good conversation as always. Well, Mitesh and Sudarshan are with us. There's 8 minutes to go for the pre-open session. Mitesh, good to have you with us here as always. I mean, how are things looking? I think yesterday we got a very good follow-on rally from Friday after that bounce that we saw. This morning, SGX is indicating a 30-35 point higher start. What would you do?
Morning, Prashant. Yesterday, I was of the opinion that decline should be bought into, clearly believing that this market will consolidate between 18,050, which is the level which we nearly hit on Friday, and on the upside around 18,450. I think that journey has begun from the lower end of the range to the upper end. And therefore, I think, we just suggest to trail the stop loss to yesterday's high once the market opens by about 35 points gap. Slightly tight, but then again, you're trading in the range and try to take some profits around 18,450. Now, I think I would want to see a breakout beyond that, but my sense is that the breakout beyond 18,450 will happen only if the Bank Nifty starts participating, which is if the Bank Nifty starts getting past 44,150. If that happens, then I think there'll be a fresh round of buying happening, maybe led by the banking index. Therefore, I think we'll focus there as well. But for the timing, trading only long on the Nifty.
Okay, got that. Sudarshan, good morning. What's your positioning and what's the advice on index strategies?
Well, the Nifty is in an uptrend. The Nifty also is in a sideways range for the last 1 month with support at 18,060, which was also the low 2 days ago, and resistance somewhere around 18,400. Now, it is reasonable to assume that 18,400 will be crossed on the upside sooner or later. So the trade is to stay long in the Nifty. If you are not long, look for small intraday dips and buy. Your stops are 18,060. For the Bank Nifty, I suggest going long with a stop at 43,500. If it's in a breakout mode, if it is a breakout is imminent, then you want to enter before that happens.
Okay, all right. Good morning, gentlemen. Let's talk about individual stocks then. Sudarshan, you?
Well, HCL Tech is a buy. The stock, in fact, IT stocks did well yesterday. Buy HCL Tech with a stop under 1,088. Infosys has broken out of a 1 month trading range. Now, whether it will continue or not, I can't say, but it's worth finding out. So, buy Infosys with a stop under 1244. Jubilant Foods is my only intraday short. Sell it with a stop above 476. Remember, keep it intraday. And finally, Vedant has also broken out of a trading range. Consider buying Vedant with a stop under 282.
Okay, all right, gentlemen. Mitesh, what about you? What are your stock picks?
So I also have a couple of picks from the IT space. HCL Tech features on my list as well. Stop at 1104, target of 1150 to begin with. The other one is LTTS, which I would recommend buying with a stop at 3880 for targets around 4050. BEL is the third buy call. Buy here with a stop below 108.5 and look for a target of around 116. And one sell call, PVR. If it starts trading below 1340, expect some more declines. So below 1340, go short with a stop at 1356 for targets of 1305.
All right, we'll leave it there. Thank you very much, both of you, Mitesh and Sudarshan. Appreciate your perspectives. Well, we'll take a quick commercial break here. We are back. Atul Kumar Goel, Managing Director and Chief Executive Officer at Punjab National Bank, will join in just a bit on the other side. Stay with us.